Hello everyone. Teamo Productions HQ, earlier known as GI Engineering Solutions, has released its September 2025 quarterly results, and this quarter wasn't as strong as last year. Revenue stayed steady, but profits have dropped sharply, reflecting slower activity in its trading and infrastructure division. Let's look at the numbers. For the September quarter, the company reported revenue of about 51.03 crores compared to 22.53 crores in the same quarter last year. That's more than double year-on-year growth. But the profit performance doesn't match that jump in revenue. The profit before tax came in at just 0.75 crores compared to 2 crores in the same quarter last year. That's a 62% decline in profits. After accounting for taxes of around 0.24 crores, the company's net profit stood at 0.51 crores compared to 1.49 crores last year. So bottom line profits have dropped by about 66% year-on-year. If you look at the first half of fiscal year 2025, total income was 80.57 crores compared to 31.02 crores in the same period last year. But again, despite higher revenue, net profit for the half year fell from 2.96 crores to 1.22 crores, showing that margins have weakened slightly. Now, let's look at the cost structure, and this is where the problem lies. Purchase of stock in trade is 50.46 crores, and employee expenses were 0.11 crores, and depreciation was 0.17 crores, and other expenses are 0.16 crores. When you add all of these, total expenses reached 50.75 crores, leaving very little room for profit. So even though sales were higher, most of that income got absorbed in costs. The company's net profit margin this quarter is barely around 1% compared to nearly 6% last year. That's a big drop in profitability. On the segment side, most of the company's revenue, over 51 crores, came from its trading and infrastructure business. The film division and securities trading segment did not contribute meaningfully this quarter. So overall, Teamo Productions' performance this quarter shows a mixed picture. Revenue more than doubled, but profits fell sharply. Margins compressed to barely 1%, and cash flow turned slightly weaker. On the positive side, the company continues to remain debt-free, has stable reserves, and operates a clean balance sheet. But operational efficiency clearly slipped this quarter, and that's what management will need to address going into the next half. For investors, this was a weaker quarter overall, where growth in revenue didn't translate into real profit growth. A reminder that higher sales don't always mean higher earnings.